Hi guys, welcome to another new video. Today we'll be talking about how to master candlesticks for beginners, and I'll be your teacher, your tutor, your mentor today, Geshara Geshehi. So let's jump into the video. Uh, there are beginners out there who watch YouTube videos, reading journals, reading PDFs, and many more, and they are wondering, what are these? This is price. This is price, and it's as fractal as it can be, moving in three types of directions. I won't be talking about the trends, but how to read these candlesticks. So this is what is known as a bullish candle. Why? Because of the things that I'll tell you. So most people prefer the normal one. That's the green for a bullish candle and the red for a bearish candle. So most people can also prefer black. They don't want the green and the red, or others prefer the black and the white, or the black and the red, the black and the green. The color does not matter, but how the candle structure looks like. So let's break it down, guys. So for a bullish candle, we usually know a bullish candle by its prices. So the prices are here, my left, right here. You guys can see my prices. Yep, these are my prices right here. So if I want to know if this is a bullish candle or a bearish candle, I'll be using my prices. So again, let's assume it's something as easy as buying a television set or buying a phone. iPhone 15 is out 2 days ago. Or if it's buying a pair of shoes. So these are the opening prices. Opening prices right here. Boom. Let me do this in black. So if you look at my black ray right here, 1.4 1.40666 is my opening prices. These are my opening prices of this bullish candle, and this was the low. This is the lowest place that this candle actually ever ran deep, which was 1.39290. So the difference between, you can see, guys, that we are pushing to the downside. We first pushed to the downside 1.40641 up to 1.39290, and then we expanded up. So the prices shot up. This is the direction. Prices shot up, and these are the highest prices that actually were experienced during this candle. Now, I'll talk about time frame later, but it's not so much of a big deal, because it does not really matter if it's in 1 minute, 3 minutes, 5 minutes, 1 day, 1 week, 1 month, whatsoever the candle. Yeah, it's fractal. So these are the highest place that the prices got to. This is the high, and you see it's at 1.51676, and by the time this candle was closing, the closing prices, these were the closing prices. Boom. So at 1.48398. So this is what I'm trying to explain to you guys. That let me do this in green. Like you guys can see, these are an uptrend. So these were the opening prices. Let me change this to black. Okay, so these are the opening prices of this candle. These are the opening prices. This is the lowest that the market actually melted to. These are the highest prices, and these are the closing prices. So there's usually most traders known as OHLC, opening, high, low, and close. So these are the opening prices. Again, opening prices, highest prices, lowest prices, and the closing price. So the body of the candle, if it's a bullish candle, the body of the candle inferiorly or in the bottom part are the opening prices. The body of the candle up are the closing prices. So the opening prices, I've drawn this to show you the direction of the market. These are the closing prices. The lowest below the opening prices are the lowest prices that were experienced during this bullish candle. Again, it does not really matter if it's a 1 minute or a 1 day or a 1 month time candle. So these are the lowest prices that are there, and these are the highest prices above the close. Yeah. So does every bullish candle look like this? No, not every bullish candle looks like this. I'll show you guys why. So let's jump into the bearish candle. So the bearish candle is an inverse of everything on a bullish candle, whereas these are the opening prices. In a bullish candle, the opening prices were low and the market was expanding up. For a bearish candle, the market's up and expanding to the downside. So these are the opening prices where you can see that the opening prices were to my right, the black label 1.48423 were the opening prices of this candle. The market expanded to the upside. So these are the highest prices experienced on this time, 1.5047 and 4 pipettes. These are the lowest prices down here, which were 1.39408, and these are the closing prices right here. So already I have my labels. So this is the opening prices, the highest place, the lowest place down here, and then the closing prices of this candle. So you guys should take this information, jump into your charts, and try to understand how price was moving. Now, if you're having two bullish candles, you'll expect the opening price to be here. If this is the first bullish candle, and let me say an invincible bullish candle up here. So if this is the first bullish candle, these are the opening prices, these are the lowest prices experienced, the highest price, and then market closing prices. You expect if there's another bullish candle, the opening prices of these other bullish candle, which is invincible. I don't know if you guys can appreciate it, but if there is another bullish candle here, the closing prices of this bullish candle that you can see will be the opening prices of these other bullish candle that you cannot see. So it will have its opening prices exactly at the same place where we're having these closing prices of this. So this closes and another one opens at the same prices, same height. Yep. So and then the market continues bullish. If it's a bearish candle and we are having two bearish candles, these being our first bearish candle and the second bearish candle that you guys again cannot see. So if these were the opening prices and the market expanded up, so it means that this market pushed up, then pushed down. By the time we are closing, these were the closing prices. If we have another one, the closing prices of this bearish candle will be the opening prices, and the market will continue expanding lower. I don't know if you guys got that. So let's jump into another one. Same concept, nothing's changed. But now I have these, but in a different. There's so many versions of this, yeah. And they have names there. This is a doji, this is a marubozo, but in either way, it's still the same concept applied. So this is a bullish candle. Why? Because of the opening prices and the closing prices. So the opening prices are lower than the closing prices. Same as this. The opening prices are lower than the closing prices. It means that the market jetted to the upside. The same as this. So these are the opening prices of as you can see to my right again, 1.47252 are the opening prices. This is the lowest prices that I experienced at 1.42988. These are the highest at 1.60207, and these are the closing price experienced during this candle at 1.47192. So what happened here? We're having a very small body and very big wicks. So this is known as a wick. This is also known as a wick. This is known as the body of the candle. Same here. This is the body of the candle, a wick and a wick. The body of the candle, a wick and a wick. So wicks are used to explain the highest prices actually pushed up to, and the lowest. The body of the candle is used to explain or give a clear picture of the opening prices and the closing prices. Yep. So the body only has an open and a close. If the candle has a wick on one side, depending if it's bullish or bearish, if it has these prices, means that it has a high. If it has this wick, means that it has a low. Same as here. Any wick to the upside is a high. Does not really matter if it's a bullish or a bearish candle. You guys can see these are the highest prices and the highest prices right here. This is the low. We're also having the lowest prices and the lowest prices. The only thing that interchanges is from the body of the candle, from open to close to open to close. So look at this other candle right here. This is a bearish candle, a massive bearish candle, and we're having opening prices up there. And this, fortunate enough, this candle had only selling pressure. We didn't have any buying pressure, and that's why from the opening prices to the closing prices, the sellers were unchallenged. So we don't have a high, we don't have a low, we don't have these wicks. We only have the body of the candle. Yep. So the last one will be something like a cross. Let me draw it really fast. Doesn't have to be that big. Just want you to grasp the concept. There are times that you'll find such also in the market. So again, if you've been following what I've been saying, so open, close, high, low, OHLC. So for this one, it has no body. We don't have a body. days candle, but we have wicks. So for this one, it means that the opening prices are the same as the closing prices. So the market opened at 1.49146. Market expanded to the upside or the downside, then expanded to the opposite side. So if it began by expanding to the upside, it created the high, this high, created this high right here. Then the market pushed down, created the low, and then the market pulled back up to the opening prices again. So we are having an open and a close at the same prices. Again, guys, it's about price, price. So we're having prices equal. The opening prices and the closing prices are equal. The only difference is we're having a high at 1.57166 and a low at 1.42988. This is also something that you'll see frequently in the market. So as long as you already know what are the opening prices, the closing prices, the highs and the lows, you are a master at reading candlesticks. So coming into my GBP USD, this is a daily time frame. So it means that every candlestick that you see here, either bullish or bearish, represent a full entire day. So this is the Saturday 16th of September, and we can see that this candle, you guys just have to look down here. That's the Friday 15th September of 2023. So what we had is this. Again, let me break down the entire week. Let me delete this. Let me zoom in as much as possible. So I want to break down the entire week. So this is our Monday. So for a Monday, we didn't have any week to the downside. We actually experienced a bullish momentum move on a daily time frame. So these are the opening prices, and we didn't have any low. We didn't have any low. Then the market expanded to these prices up here. These are the highest prices that were experienced on a Monday. 1.25491. Again, I'm looking to my left to give you the coordinates. 1.25482 are the highest prices experienced, but by the time we are closing on a Monday, these are the closing prices at 1.25092. And if you guys don't want to read to the left, you can just place the cursor right here and then read up here. Look guys, it's all written up here. OHLC. Boom. You already have everything that you're looking for. So if I place my candle on this Monday, again, you look to the downside, you see that's Monday 11th September 2023. Up there, you can see the opening prices. Again, I'm looking up here. Opening prices at 1.24618, the highest price at 1.25484, the lowest price at 1.24. It looks like there's a small one. That's the lowest prices that we had. And you guys can see the difference between the open and the low. We have no difference. The opening price is at 1.24618 and the lowest price is also at 1.24618. It means that we didn't have any low. The opening prices were also the lowest prices that were experienced on that day, because we don't have a week down here, but we have a high at 1.25484, and then the closing prices right here at 1.25094. If I jump into my Tuesday, you guys can see my Tuesday. So let me break down Tuesday. So these are the opening prices. These are the highest prices. These are the lowest prices experienced on a Tuesday. And these are the closing prices experienced on a Tuesday. Again, you just have to put your cursor here and see that you are on a Tuesday down here, Tuesday, 12th of September, and look up here so that you can know the opening prices and continuation. And again, this is a Wednesday. These were the opening prices. You guys can see we're having two bearish candles here. So the closing prices of Tuesday were the opening prices of Wednesday. Again, two bearish candles. It does not really matter if this is a spinning top and this is also one or a doji. But the closing prices were the opening prices of the other candle. For the Monday case, these are the opening prices, the high, we didn't have the low, and we have the closing prices. The closing prices of Monday are the opening prices. Same. You guys, I'm looking up here. Closing prices 1.25094. Opening prices of Tuesday. Look at the open up here. 1.25094. The closing prices becomes the opening prices of the other candle. The same as this. The closing prices here 1.24, again it's up here, 1.24936, and the opening prices in this candle, again I'm looking up here, and you see Wednesday, I'm pointing on a Wednesday, so it's 1.24936. And then we jump into our Thursday. The closing prices are the opening prices of the following day. So these are the opening prices. This is the highest the market actually that day experienced. These were the highest prices the market experienced. These are the lowest prices. These are the closing prices. And up to our Friday, this is the closing price, this is the opening price, this is the high, this is the lowest. We have a small wick down there, and then we have our closing prices at 1.23835. With this information, guys, you can navigate and understand price, how price was moving for a whole month, for a whole, even if I jump into my monthly time frame. For this, let me delete everything up there. So for this, every candle represents 1 month, and you can follow how that whole month actually went. Yep. So again, you can understand candlesticks even better without analysis. It all starts with the candlesticks, understanding the lowest prices, the highest prices, the opening and the closing prices. With these guys, with this information, I hope you'll have a nice trading day. You be blessed, you stay blessed. Check out the other video on liquidities. Bye guys.